goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I posted the picture of the Prague clock from our good friend Zach Moore down there in the southern part of the United States of America. What amazes me about this clock, not the fact that it does so many things. It does the solar ecliptics. It does astronomical time. I mean, it just does it all. And remember, this was built in 1400 AD, folks. This was before Mr. Fibonacci himself. And it's really a spectacular thing. If you ever go there to Czechoslovakia and see it, then stop and think, folks, in the middle of World War II, this thing survived all of that. It's truly amazing. Also, if you're ever in Riyadh, Saudi Arabia, you should see the clock by Al Jazeera. It was built in 1300s, around 1250, the same time that Mr. Fibonacci was writing his paper, Liber Abaci, which means freedom from numbers. And that's also a spectacular thing. There's also another clock in Saudi Arabia. It's called the Elephant Clock, and it is unbelievable how these things keep such precise time. I mean, the minds behind that goes behind this is just absolutely mind-boggling. What we're trying to do is to find out what's the next move by the Fed. This is really, really spectacular stuff. Anyway, that's enough of this, so let's move on to a couple of the things. We got the Fed going here today. I want to go through a couple of things that happened yesterday that warrant our attention, and one of them has been in the news quite a bit. And basically what happened was 1 minute before the Fed acted, before they brought out that Bureau of Labor Statistics on the inflation, you'll notice here what happened here. This was 1 hour. This was 1 minute, folks, before the actual report came out. So by the time the report came out, these things had already jumped that much. And I thought somewhere in here is where it was, but this chart is saying that it was actually 1 minute. I knew something was wrong because my time, I could see my time at 6:26. It was 6:28, 6:29, which is 8:29 in New York, and the prices were trading crazily. And that's long before the report should have been coming out. Now, if you think that stuff doesn't happen by accident, boy, you're really being naive. I mean, that's really something. I mean, this is really amazing. I mean, we have this happen to us all the time in there. These people have indications of what these reports are. Don't be naive, because they know there's money behind that. Don't you remember in Duke and Duke, the orange juice report, how much they paid for that to get it early? And of course, a false report, of course, but that's what actually happened. Okay, let's see where we are now just to see what will happen today. Here's the action that happened in the S&P yesterday. This is the E-mini S&P. I know you all know this, but we all learn by what's happening, and this is where we were at that time. You'll see we had the big run-up. Now, all I'm going to do now, this is exactly as it was happening yesterday. I mean, you didn't see any sell-off here yet because that was happening while the show was going on yesterday. So what we're going to do now is we're going to update it to where we are exactly right now, and that's why I think it's important to take a look at it. So I'm going to do it two different ways. I'm going to show you short term, and I'm going to show you in the long term. The first one is going to be the long term, and here's what we're looking at. You'll see here that we've had the sell-off. Now you see the sell-off that we've had here, correct? Now that was exactly at the 78% level of this move right here, and 50% of the move way back here. So we had double numbers up in there. That's why it was so very important, and it remains to this day to be important. So now let's see what happened since that time of last night and where we are today. Now, I haven't updated this for a while, but I have a rough idea. I don't know what's going on. Don't really care. I'll look at it in just a minute here. But here's what I was watching. Just looking at this 15-minute chart, you can see we have this huge 140-point drop Okay, what we do, we went almost to the exact 382 last night, folks, and we pulled down to almost the exact 618. That gives the ABCD up here at 4092. I don't know. The last time I checked, it was trading around 40, what was it, 4078, 4079, something like that. So evidently the Fed, if he's talking now, it's not affecting the market too much on any of these things, so we'll be watching it. Also, those of you that were fortunate enough to get short the Treasury bonds yesterday, hang in there. They're starting down, and I think that they've got a long way to go to the downside. So let's remind ourselves, folks, it's not how much money you make, it's how much money you don't lose, and that's the real key to this. Now, Larry Williams has come out with a YouTube that is just really, really terrific. I'm going to share with you some of these things, but if you want to see the whole thing, it's 49 minutes in length, and it's basically some of the things that he did well, some of the things that he did wrong, and I think it's important that we share what he has, but he's been around for as long as I have. Larry's 2 years younger than me, and no, he's 3 years younger than me. He'll be 79 in April. Yeah, that's it. So that's what it is. Anyway, he talks. I wanted to show you something that he talks about. He said about breakouts that you have in the market, and this is a thing that I think you'll really enjoy this, because those of you who like patterns should enjoy it. So here's what he was talking about. He showed these charts here to show you where these chart patterns had breakouts. You see the false breakout that you had here, and you had the other false breakout right here. Well, those of you that belong to the old pattern recognition club, we know what those things look like. Do they work all the time? Of course not. But I'm just going to bring these two examples up that he was showing in the video, and all I'm going to use is the simple AB equal CD. And that's what you have here. You can see a perfect at the top, ABCD right at the top, and at the bottom, ABCD right at the bottom. So that's what you're looking at when you're doing pattern recognition. You start with ABCD. Does it work all the time? Absolutely not. And you don't expect it to work absolutely all the time. Just not going to happen. You just can't do it. If you think something's going to work all the time, you're in big trouble, because that's the main thing that'll get you in trouble, is the fact that you're expecting something that will not happen. It's not going to happen every time. Never, it will, never can. Okay? So remember that. It's very, very important. Remember, all of our frustrations in life come from expectations that were unfulfilled, whether they're in the market, whether in the movie that you're watching, or your children, or your spouse, whatever it happens to be. Unfulfilled expectations are what cause our frustrations. And if you start worrying about them, remember, 90% of what you worry about never occurs. So don't be a worrywart. It's not going to be helpful to do that. No question about it. You just can't do it, especially during these times of the holiday season, folks. This was my mother's most wonderful time of the year, because she did so much for the poor people, and my sister still does it. I try to do a small fraction of what my sister does, and she's like Mother Teresa of Indiana. Hey, let's take a break. 877-927-6648. Billy Ray Valentine, Capricorn.
Currencies, commodities, and bond markets are as important as ever right now, with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've got to highlight some of the things that Larry Williams talked about in his YouTube that he did. You can go and see it, just Larry Williams YouTube, and you'll be able to see it yourself if you want to see the whole 49 minutes. He's up in his lodge in Montana right now for the Christmas holidays. But notice here that he says, don't bet big. Control your losses. You're not the master of the universe, boy. And if you think you are, you're in big trouble. Find something to do other than being a trader, because you're going to be able to, be able to do that without any trouble at all. Anyway, let's move on here. And I wanted to cover a couple other of these things that I think are relatively important. These are really interesting. These are the lessons that he's gained over the years. I have to agree with them 100%. I've known him since 1965, so I met him at the same time I met Peter Elides in the old Clayton brokerage office there in Westwood, Los Angeles. And anyway, these are lessons from that Larry talked about. He says, believe this trade will lose. And I talk about this all the time, folks, and that is focus on how much you have at risk as opposed to how much you think you might make. That's really important. And if you're worrying about they, like they is the Fed, or they are the gold bugs, or they are the Swiss traders, or whatever it is, they really don't exist. These markets are so big, there is really no they out there. Sure, the Fed can play games with the market for a short period of time, but not from a long period of time. It's really amazing. And the dumbest thing he says here, the dumbest thing that you can do is to give up. My favorite quote by Winston Churchill is, he says, never, never give up. And that's really what you have to do when you're a trader. This young man I spoke to from France yesterday, he's only 26. He's frustrated because he can't make any money. He's been doing it 2 years. He's got all these technical indicators and everything else. And I said, you just haven't found the right thing yet. I said, it's out there. You just have to keep looking. And then when you have that, then you have absolute trust in what you're doing, that this system is going to work more than it's going to lose. That's all you really have to have. That happened to me during the 1976 through 1982 when I was at Drexel Burnham. I made good money there, but not only that, but I proved myself I could do it. I had a great mentor in John Hill, of course, and some others too. But John was, the basic of everything that I learned, because he gave me access to ABCD and Fibonacci and stuff like that long before anybody else ever had it. So that's the main thing, is you got to find that particular thing that you like. And my little thing is ABCD, along with a little backpack full of patterns that are related to ABCD. And they're all related to risk control, that's for sure. And the hardest thing in this business is to admit that you're wrong. And believe me, I do that all the time. The one thing I won't do is make an excuse for a trade, because if I do a trade, I think it's got a chance. There's no excuse behind it. So that's the main thing. That's it. Remember, if you're if you're losing in these, excuse me 1 second, please. Losing, that tells me you're wrong. This is why you should never add to a losing position. On this painting right behind me here in the office, number one thing is never add to a losing position. Absolutely the dumbest thing that you can do in trading. And the reason for that is, A, you're wrong in your assessment of what the market is doing, and 2, you're doubling your risk exposure. 2 of the worst things that you can do to see if you're ever going to be right. The number of times, and I used to do it, but the number of times I ever did it that worked, you could count on one hand and with 3 fingers missing, like what Twentyman has. Anyway, they just don't work. They're terrible. Learn to go the opposite way. That's the main thing. I've told the story about when I was in Chicago and I was trading through Lynn Waldock, and Barry Lynn says, "What can I do to make your stay here very, very fruitful?" And I said, "If I have a loss at the end of the 3rd day, just take the position off automatically. I don't even want to put the order in." He said, "Yeah, we can do that." And over those next few years, that happened to me probably half a dozen or more times. And all I had to do was just reverse the position, and I would have made a lot of money, because my analysis of what the market was wrong, but everybody else was right. So all I had to do was turn that around, and I would be okay, The other thing is Larry talks about this, and don't try too hard. You're not going to be perfect. You don't have to be perfect in this business, for God's sakes. I mean, if we try to be 50%, that's great. There's no basketball team that wins 50% of the championships. And even Tom Brady, look at him. He won 6 out of 19 or whatever many years he had. So, no one's going to be that good. Look at Babe Ruth. He struck out 1,000 times. Are you kidding me? That's a lot of strikeouts. Look did you realize how many shots that Kobe Bryant missed? And how many goals Wayne Gretzky missed? When Gretzky says, you miss 100% of the goals you don't try to hit. And that's exactly right. If you don't try, you are not going to make it. So that's the main thing. You've got to find something that you believe in. I don't care what it is. It could be a moving average. It could be an oscillator. It could be anything that you feel that you're comfortable with and you can prove to yourself that it works. You're on your way. That's what you got to do. That's what I tried to tell this young man over in France. But I can tell you with 100% certainty, it probably went over his head, because he's young and he said, "Why would I listen to that old goat?" And sometimes I ask myself the same question. But anyway, that's what I learned from. I learned to do some of these things the hard way. I didn't get it the easy way, boys and girls. I can tell you that right now. That's the main reason that I've always tried to share everything that I have, and the good and the bad, so you can understand. In fact, most of the books that I've written are things that, what worked and what didn't work. And that's what people wanted to understand and learn how to do. Ed Dobson proved to me that when he was running Traders Press. He said, these people want to know what's on your mind and, why you're losing and what did you do about it and how did you correct it. And those were the things that I tried to, bring to you, because, I certainly don't have any holy grail, but I got a grail and it works most of the time. And that's the main thing that I try to work on as we look at these markets, each day. So I want to share one other one up here that is very important. It's a really neat picture. It's not the market that you're fighting, folks, okay? It's not the market that you're fighting. Here's what you're fighting right here, and that is you're fighting your mind yourself, because this is the 8-inch cycle, folks, from your left ear to your right ear. If you get that one right, the rest of the stuff just falls into place like you can't believe. I know you've seen the picture of the little girl that's doing the crossword puzzle on top of a glass table, and she's got it upside down. And they asked his mother. His mother asked, "Why are you doing it upside down?" She says, "Well, she was trying to do the picture of the man." And she said, if I get the picture of the man right, the world will be right. And that's just about right. So if you get the little pieces together in trading, the rest of the stuff will fall into place eventually. And it's not easy. Like Mark Douglas said, trading is simple, but it's not easy. It's going to take a couple years and dragging it out. And, John Hill had me under his wing for well over 16 or 17 years, and I was kicking and screaming the whole way. Hey, we'll be right back. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, one more segment from Larry Williams, and we'll get on to talk about gold and the crude oil and silver and some of the other stuff. But you'll notice here that the chart is labeled Dance with the Devil. Larry doesn't like to day trade anymore. He used to years ago. But what he showed you here was that if you're going to day trade, try to get something that will give you some idea that you have some type of an edge, because these markets jump around quite a bit, whether it's a 15-minute chart or a 5-minute chart, whatever it happens to be. And what he does, and this is the same thing that I do, and I'll share it with you right here because it's I know 99% of you are not going to do the work. But anyway, if you'll notice on this chart here, it shows the red line, which is a predicted line. All that is, it's a going back over the last 5 or 6 days and finding where the highs and lows were during those last 5 or 6 days. Now, I do exactly the same thing when I use my little artificial intelligence line, and I'm going to bring it up here to show you what I was looking for today, and then I'm going to walk through how you can do this. I'll be spending more time doing this in February or March when I do the next live trading. But you see, this area here is where the market started to change. Folks, those of you that bought the Floor Trader's Handbook, you've got some really great information in there, because if you statistically look at how many times the stock market bottoms between 6 and 9 a.m. and tops near 12 and 1 p.m., you're going to be really surprised. And that's all you need is an edge. Now, if you add some patterns in there, you get a pretty good idea that, yeah, maybe this could work. Now, has this worked today? It's just going sideways. It hasn't gone down, but it's still doing what it was supposed to be doing. I'll get the other part of this up here, but this is what, and believe me, I don't hardly do any day trading, folks. I'm a pattern recognition swing trader. I'm looking trades that are going to last anywhere from 3 days to 2 or 3 months if I get potential for being lucky. So that's what I'm trying to do when I look at these things. So if you're going to do day trading, do the statistics behind it and do the work to see where these markets have a tendency to turn, because they do the same thing all the time, folks. Do they do the same thing every time? No, but most of the time they do. That's the key to what we're really watching here. All right. Now let's get on here to the gold market. I want to show you something that I think this is where people sometimes, and myself, get into a little trouble. Now, what I'm going to be showing you now is a 15-minute chart of gold during this big run that we had here. You'll see here, there's where we are right there, and you'll be able to see it. There's the gold market right here. Now, I had sold this little ABCD pattern right here, knowing full well that the Federal Reserve was in there, but I know that my stop was right there. And believe me, even with this big move, I got filled within 10 cents of where the price was supposed to be. And look what happened. The market came up, and look, we came all the way down. We went a little below the 382 retracement, and then we had this little bit of a rally. Now, here's the quandary that you have when you're day trading, and this is normal. You got to go through this all the time. If you update what's really happened here, let me get the right one up here. There we go. And I'm just updating it from what I'm looking at here today, and you'll be able to see that if you keep looking at these numbers long enough, you're going to see that they pop up over and over again. Now, again, you'll see we stopped exactly at the 382 retracement of this move down right here to the exact tick. And now we backed off about $6 or $7 in the gold market. Well, that's $700 of a stock or a commodity that's trading for $180,000, which is not very much. But when your risk is only $5 and you made $7, now you're in a risk-free environment, and that's what you're trying to get to, is to get to that risk-free environment just as fast as you can, so you don't have to risk very much at all. That's the real key to what you're watching right here. I bring that to your attention is because you're going to have opportunities on both sides of the market, and you have to determine which side you want to trade. That bases on your belief in your system that you're looking at, how much you're going to risk, and also your ability to manage that risk once you get into it. That's the really simple part of what trading is all about. Okay, now let's get back to something that's happened here this week that we were talking about last week, and it's I don't have to tell you what's happened, because all you have to do is look at the quote board, and you can see what's happened to the energy markets, because we had this giant ABC down here forming at the 1.27 expansion there, and missed it on the downside by about 4 cents. We've rallied now 39 cents here in just a matter of a few days. It's been a straight up move. There's going to be some resistance coming in here. Now, there's the same thing that we'll be doing now that we're doing in the gold market. We have to determine if this 382, wherever it comes, is going to be valid or not. You can already see it's above the 382 of this one. So this is what we have to plan to do, because we want to be a buyer of this, because we're in the midst of a very strong seasonal. You might find this hard to believe, folks, but in the wintertime when it's really cold, people have a tendency to use more heat and electricity. What an interesting concept. But what you have to realize now, folks, seasonals don't work all the time. Maybe it's going to be warm in Europe this year. We don't know. It's still too early. Remember, December 22nd is coming up pretty quickly here in just about 8 days, and that's the start. That's the winter solstice. That's the start of winter until we get into May the 20th, which will be the start of spring. So during those months, people are going to try to warm themselves more than they do during the summer months. That's not rocket science. Okay, now switching back to the gold, I want to get back to silver here because silver, folks, is acting so beautiful. I mean, it just does not want to back off at all. It's up again today with gold being down $6 or $7. The silver still going higher. During the poker tournament that we had this past weekend, we had several coin dealers that were there, and they were chatting on Table Chatter about the fact that there were just no silver rounds that were there to tell whether it was going to be good or not. And I don't know, is this chart okay, Al? Because I can't tell if it is or is not. By the way, if you have any questions, folks, it's 877-927-6648, and we'll be happy to answer any questions if we can. But as you can see here, we've got a target here on silver up about another $1.50, up near that $27. Folks, there's a possibility here, if we can get silver above $30 an ounce, that we could see a 1.27 expansion of the whole move, and we could see silver at $78 an ounce, folks. I've only seen it at $50 an ounce twice in my lifetime, but that's not a big deal in these kind of markets, because if you can get things like crude oil to go from 140 down to 76, you could easily get the price of silver to go up, because there's just not a lot of silver out there that is deliverable against the contracts. And that's where you can get a short covering rally here, and that could really be a really big monster. Remember, on Sunday, we got a nice chart from Rich Anderson, and I'll bring this up here to show you what's happening. This comes from the World Gold Council and Bloomberg Research, and you'll be able to see here that most of the buying here in gold for 2022 has been none other than the 10 major central banks. And let's be like a central bank and try to get some gold and silver. I've been bullish on this program here since silver was at $14. I remember that very clearly, because I said these coins are absolutely beautiful pieces of art, and you should put them in your safety deposit box because someday they ain't going to be making them anymore. 877-927-6648. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I posted the chart here of the NASDAQ and also the daily NASDAQ, and you can see the difference here. Now, I noticed that my beepers are going off now. That's telling me that we're starting to exceed above the 382 percentages here. So that's the main thing that we want to be watching. We just did it by point or two in some of these things. So let's just remind ourselves that that's what we're watching here when we're seeing these things here this morning. Okay, all right. Now let's take a look at that NASDAQ chart, folks, because that's really an important chart. You know, right now I just noticed that the 382 on this came in at 2053, and I just noticed we were trading at 2064. I'm sure that's due to the Fed chairman talking about how wonderful things are, but that big move that we had yesterday in the NASDAQ stopped exactly at the 382 of the March high, folks. Boy, that was to the tick. I mean, boy, oh boy, you talk about something that was spot on. That was really it. And then we had a couple of 382s on the downside as the market reacted, you know, up 500 to down 500. Do you realize, folks, that was a $10,000 move up and a $10,000 move down in the NASDAQ in a period of about 4.5 hours? Boy, that is market volatility in spades. And that means something because you had a lot of buyers and sellers, and they were different fellers. And that's the main thing. Now, we've got the Treasury bonds now starting to work lower. They're down now more than 2 handles from the high. If you remember, we were suggesting this was going to be the high of the 8-week cycle in here. And, you know, to try to get in so that you could possibly get a spot where you wouldn't have to risk very much at all. I'll show you the picture of the notes here, but it's the same thing. We've had a really nice run here in these things, and believe me, we're in a major bear market in Treasury bonds, folks. I know we could get another 382 retracement of this, but this is a major bottom that we're looking at here. Well, excuse me, a major bear market. And that's, folks, this is nothing new. It's been going on for 2.5 years. I mean, this is not, you just have to look. You know, look, oh, down. Trend is down. Yeah, lower highs, lower lows, lower lows. That's what we're looking at. See, that's how you define what a trend is. What is the value of the trend? That fact is, this young man from France, I spoke with him probably about half an hour yesterday, and I asked him, I say, what's your definition of trend? And he hit it right on the money. He said, if you have higher tops and higher bottoms, you're in an uptrend. If you have lower tops and lower bottoms, you're in a downtrend. I said, you're on your way. I said, just find something to trade within those trends and you're done. That's all you have to do. Trade in the direction of the trend. If you got a downtrend, try to sell rallies, okay? If you got an uptrend, try to buy breaks. I said, that's all you have to do. I said, this is not rocket science. And it isn't. Keep it simple, stupid. That's what I always tell myself every time I look at these charts. I say, you got to be able to get in there and try not to risk very much. That's the whole key. Like I say, it's not how much money you risk, it's how much money you don't lose. And that's the key to watching it. Now, the euro. The euro has broken out to the upside. I want to get this up here because no question about it. I know things are bad in Europe and things are supposedly better here, but we're in the midst of a rally in a bear market. We've been bearish this thing for a very, very long time. You can see the 3 drive to a bottom pattern down here. This is when the dollar index was topping up there at 113, 114, and everybody said it's going to go to 120. Well, look where we are now. You see that 382 that was there? We shattered that on Fed Day. When that CPI number came out. We're trading way up here now. We're almost at the 50% level, getting near 107. So there's another one that you got to pay really close attention to. We're looking at the pound. We're looking at the Australian dollar. We're looking at the Canadian dollar. We're looking at the euro. So we're watching all of these to see which is going to be the best possibility for a profit once we can find an entry that gives us a very, very low risk opportunity to trade. That's what it's basically looking at. You have to have belief in your own consistency, folks. You know that you're going to lose part of the time, and you're going to have losing streaks. And how you handle those losing streaks is going to determine how successful or unsuccessful you're going to be in the trading. That's the main thing. I always remember these things from my good friend Mark Douglas said, trading is simple, but it's not easy. But you can do it if you don't give up and keep practicing and find out what these patterns are doing. That's all you have to do. Just that young man, he has it all figured out now. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That means there's higher tops and higher bottoms. You're in an uptrend. Lower tops, lower bottoms, you're in a downtrend. And that's basically what it amounts to do. It doesn't make a difference whether you're Elliott wave or a Chapman wave, and Basil's going to be doing his show tomorrow, or just ABCD patterns like what I use. It's just how you might measure it to see whether you are within that context of where the trade happens to be. And that's it. That's really what the whole trading is all about. I say we had a nice little pop here of about 20 points here in the S&P. It didn't really go very much. I saw the beepers go off, but they stopped, and so that's really not much going on in here. Now, we have about 2 minutes to go. If you have any questions, it's 877-927-6648. But let me be very, very clear about something, folks. I want to get this up here to let you see this, because if this just a minute, hit the wrong button. Here we go. And I have been bearish since June the 4th, January 4th, okay? And when we made this big ABCD down here in October, I said, that's getting ready to have a rally. And we did a rally in bonds and a rally in stocks. And here's where we are here. You see where this number is right there at 4180 in the March S&P? If we get above that, folks, we're going higher, and we're probably going to make new highs on the year. I know the folks at the Elliott Wave people are not going to believe that, but we got a high probability of doing that. That's why this market should stop right where it stopped yesterday. No ifs, ands, or buts about it. Look at the lower tops and lower bottoms. This is a bear market that we're looking at here in stocks, folks. This is no longer a bull market. This is a bear market. Look at that. They're lower, 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 lower. And if you look at the Russell, and I already showed you the NASDAQ, it's only making a 382 from the March high. There's the March high, folks. The NASDAQ's way down here. That's not bullish action. Hello, operator. No, it's not. We talked about the Hincks index, when it was trading at 15,000. Went below it for about 2 hours one day and has rallied to 21,000. It's rallied 22%. In a bear market, and that's all it is a bear market. So these happen, and you've got to sort of be prepared for them. That's the main thing that you got to do. So I hope that helps. Anyway, remember, a Monday is going to be Mr. Norm Winsky will be my guest. I don't have any other guests. Today's a fun day because I'm going to have lunch with Stan Harley. Still have not heard anything from Tim Bost. I've got all my feelers out, but I haven't heard anything, and I hope no news is good news, but so far, nothing so far. We'll hopefully find out here in the next day or two see how the Tip Man is doing, because he's a really nice guy. Plus, he's got great information here. We'll also have next week, we'll have Bill Meridian from Cycles Research out of Vienna, Austria, will be our guest, and also Jeff Hughes. We'll have those three next week, will be our guest. And also, our good standby guy, Mr. Shane Spolian, will be our guest also. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Sign up for Basil's live webinar, airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar, just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques, as well as answer questions live. Spots are limited, and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, looking at that NASDAQ, it went above the 382 level by about 6 points. And now it's back below it by about 16 points. So whether that is significant or not remains to be seen. But the fact that it's happening during the time that the chairman of the Federal Reserve is speaking does mean something. There doesn't seem to be a lot of buying like it was yesterday. Yesterday, the whole world wanted it, and they gave it to them, that's for sure. So let's remind ourselves here, folks, that we've got the Christmas holiday coming up. I'm going to give you a little gift right here, folks. Trading is really simple. Here's what you've got to do. You look at the thing and the chart or whatever it's looking at and you say, is this a valid signal? And if this is a valid signal, you'll say, how much do I have to risk to see if I'm right or wrong? And if you can answer those two questions, it's a valid trade and you must do it. And the reason for that is it's all probability, folks. It's a probabilities game. It's never going to be different than a probabilities game. And the faster you realize that, the better off you're going to be. If you lose 3 trades in a row, that's really good news. You know why? Because you're just that much closer to your next winning streak. And that's what it's all about. You just got to keep going, never give up, keep your eyes focused on what the prize is. And the main thing is always protecting your backside, worrying about how much money you're going to lose, not how much money you're going to make, because you never know how much you're going to make, but you can control how much money you're going to lose. You see the difference? And that's why you got to think like that slot machine is. I've taken in $1.2 million more than I've given out, and you can never beat me long term. But short term, you can beat me, but that's okay. That's what brings you in to let you play again, and eventually I'll get all your money. And if you stop doing that in stocks and commodities without a plan, they're going to take all your money. So just get ready for that, and you'll understand that. So live every day in an attitude of gratitude. May God bless. We'll see you on the flip side tomorrow, folks.